Good morning, ladies and gentlemen. Thank you very much for joining our webinar this morning. The key objective of the webinar is to launch our Fintech report, our Fintech Census 2020 report. First of all, let me start by thanking the over 40 fintechs, regulators, and incumbents who have participated in this Fintech Census report. I would also like to thank the executives of EY Nigeria, as well as Fintech NGR for making this happen. So special thanks to Anthony Oputa, who's our regional managing partner, as well as Mr. Bajomo, who is the president of Fintech Association of Nigeria. Now, today's conversation is themed the future of Nigeria, the Nigerian fintech industry, growth, collaboration, and policy. It promises to be a really exciting event over the next 90 minutes. We would quickly go through the agenda for the event before Tony gives the welcome address. So in terms of the agenda, the plan is, sorry, Timothy, can you move to the agenda slide? Thank you. Yeah, so in terms of the agenda, we will start with the welcome address, which will be given by our the EY's regional managing partner for West Africa, Anthony Oputa. And we will then hand over to Mr. Bajomo, who will introduce the speakers and panelists. And thereafter, I will be making a presentation on the insights from the Nigeria Fintech Census report for 2020. Once we're done with all of that, we will then go into a panel discussion, which would include a question and answer session. And like I had mentioned earlier, the discussion will be themed the future of the Nigeria Fintech industry, growth, collaboration, and policy. We will have quite a number of distinguished panelists, people who have excelled within the fintech ecosystem. So amongst the panelists includes Mr. Musa Jimo, who's the Director of Payments System Management at the Central Bank of Nigeria, Mr. Obi Emetarum, who is the Chief Executive Officer of the Appzone Group, Ms. Odun Eweni, who's the Co-Founder and Chief Operations Officer of PiggyVest, Mr. Wilfred Mama, who's the Group Head of Digital Transformation at Stanbic IBTC, Mr. Chuma Ezirim, who's the Group Executive, E-Business and Retail Products at First Bank of Nigeria, and Mr. Nita Kimber, who is a partner within our EMEA Financial Services at EY and also leads FinTech within EMEA. So, and then thereafter, we will end, after taking questions from you, we will end with a vote of thanks from Dr. Segun Aino, who is the past president of the Fintech Association of Nigeria and who pretty much conceived this Fintech Census report. So without much ado, I will pass it on to Mr. Anthony Oputa, who, like I mentioned earlier, is our regional managing partner at Ernst & Young. Mr. Tony Oputa, over to you.
And good morning, everyone, and wherever you are. If it's good afternoon, I also say a very good afternoon to you all. The invited guests, the eminent panelists and speakers, as well as the distinguished participants. Again, let me formally welcome you to the EY and Fintech Nigeria Census 2020 launch event. With the advent and advances we witness in wireless communication technology, as well as the ubiquitousness of mobile handheld devices in our lives today. Indeed, financial technology or fintech continues to have a transformative as well as a pervasive impact. Sometimes that impact is also intrusive on our daily living and how businesses and individuals transact in the financial world. Fintech or financial technology is indeed here to stay, and it will shape our future going forward. And therefore, the Fintech Association of Nigeria, in my view, it's a very timely organization. It's been around for a while and has earned a well-deserved reputation for being a catalyst in the development of the fintech industry in Nigeria, and it continues to be a primary source of information for Nigeria's fintech industry. This association, as mentioned earlier in that was speech, not only includes regulators, both the current regulators, but as well as potential regulators, but also some of the most significant as well as emerging players in this space today. When I was asked to give this speech, I took time out to look at the website of Fintech Association of Nigeria, or Fintech NGR, and their vision is encapsulated as such, and I quote, to make Nigeria one of the world's leading markets for fintech innovation and investment. And he also stated a mission, which was to foster an ecosystem that supports stakeholders to achieve a thriving and growing Nigerian fintech industry. I looked at that and I could see a very clear alignment of purpose with what we at EY pride ourselves as. At EY, we are a purpose-driven organization, and our purpose is indeed to build a better working world, not just for our clients, but also for our people and for the communities or stakeholders where we operate in. To this end, I am very clear in my mind that this partnership between the Fintech NGR and EY is naturally one between two organizations with a common goal of building or enhancing or developing a thriving fintech landscape that indeed meets the aspirations of all stakeholders. It is against this background that we at EY agreed, or in collaboration with Fintech NGR, regarding this webinar of today, which is about the launching of the Nigeria Fintech Census 2020 report. I recall a couple of months ago when Dr. Segun Aina came to our office, and we had a discussion on how this can benefit not just the Nigerian ecosystem, but even Africa as a whole. And I did express to him our willingness. In fact, we were eager to partner and get this to fruition. I'm truly happy that today this is happening. I am indeed glad and excited, and I'd like to say that that this could not have come at a more auspicious time. If you look at the events of the past couple of weeks or months, the need for us to social distance, the need for us to start working remotely from home, but life still had to continue. And because of the pace at which financial technology had progressed in this market, it was clear that even in this new normal of staying social distancing or staying working remotely, we were still able to carry out our various kinds of financial transactions without having to come have physical contact. And indeed, we have come a very long way. But there's still a lot to be done. And those are some of the insights that this report will be presenting to us. Where are we today? What are the opportunities and challenges that the Nigerian fintech industry sees? And where is the next growth opportunity going to come from? At this point, I want to formally welcome the president of the Fintech Association of Nigeria, Mr. Bajomo, as well as all members of the banking community and people who graciously accepted to be represented in this session. Also, I will remiss if I do not mention Anita Kimber, who also took our time. Anita is a partner in our email practice, Ernst & Young, working out of the UK. For accepting to be part of this launch. Indeed, thank you, Anika, for this. And I also want to extend my personal thank you to all the amazing team at the Fintech NGR and EY who tirelessly work to make this a reality. I'm indeed very proud to be associated with this, and I really look forward to the deliberations we have today. I wish you great deliberations. I say thank you again and do have a pleasant time. Thank you, Dapo, for giving me this opportunity. Thank you.
All right. Thank you very much, Anthony. That was a good speech. At this point, I think Mr. Bajomo has some challenges joining at the moment. So we will come back to him in a few minutes, but I think we can just go ahead with the next item on the agenda, or if you just give it a few minutes, I think Mr. Bajomo is eventually able to join. So Mr. Bajomo is the president. Hello, Mr. Bajomo, are you on, please?
Yes, I am on. Good morning. Sorry for some technical glitches, so I'm not able to join via video.
No problem. So Mr. Bajomo is the president of the Fintech Association of Nigeria, and he's also an executive director for technology and operations at Access Bank. So Mr. Bajomo, over to you. Thank you.
Thank you very much, Dapo. And good morning, everyone who's joined in. The country manager, EY, members of the fintech ecosystem, regulators, and our invited guests. It's really an exciting time to be in fintech, fintech being a catch-all word for startups and innovators and all the things that go with that. The fintech ecosystem has witnessed significant growth in the last 10 years, and no doubt is a sector that has potential for continuous growth when we look at areas that are yet to experience scale. You look at areas like insurance, agri-tech, ed-tech, prop-tech, health tech, and the list goes on. And despite these sectors, there's still room for new innovations, still in payments, in lending, in wealth tech, and some of the other leading sectors. And, it's really great to see that Nigeria and indeed Africa is finally making headway. We can boast of at least 5 unicorns now within the Africa space, and 2 of them are clearly in Nigeria, InterSwitch, Flutterwave. And I'm pretty confident that there will be more to come. With 40 million people yet to be financially inclusive, the opportunities remain enormous. Fintech NGR and EY commenced this journey a couple of years ago. We've had some slowdown due to COVID and all of that, but we're here today, and I'm very, very excited that EY has stuck to this and, providing, what is a fundamental building block in terms of the census that you have for the fintech market. We believe this is the beginning of more collaboration between both organizations, and I appreciate the EY team for this gesture. This study helps to dimension the ecosystem and point to areas that should be looked at and the current operators in the ecosystem. Fintech NGR is proud to be associated with EY in producing this document, which will be updated, of course, annually. With this, I would like to welcome all the panelists for today, who are also contributors to the report and have been very thoughtfully selected to provide an insightful view of actually what's going on within the landscape in Nigeria. A very, very exciting, buoyant landscape, which I believe is just at the starting point, by the way. Firstly is Mr. Bajomo. I believe he is being represented by one of the assistant deputy directors in Central Bank of Nigeria, Mr. Akinwumi. Mr. Bajomo is currently the Director of Payment System Management and responsible for developing the payment system industry through effective payment policy and framework. He provides oversight on the participants of the payment system and the entire financial market infrastructure for effective monetary system and financial stability. He previously worked at FSB International Bank as head of e-banking services and system development group, and also at First Bank as head of MIS and delivery channel. So you can really see, a very strong profile and insightful baseline here joining the panel. Next is Obi Emeterom. Obi, as you all know, has been right at the forefront of this industry for several years, extremely proud of what he and the guys in AppZone are doing. Obi co-founded AppZone in 2008 with a focus on the broader view of providing technology to empower people with unlimited access to quality financial services. From inception, Obi has led AppZone's stellar growth and consequent emergence as Africa's leading provider of homegrown banking and payment software. He also co-founded Parkway Projects in 2004, serving as pioneer executive director and playing a significant role in driving Parkway Projects to market leadership in electronic payment solutions. Oduayo Eweni is the co-founder and co for PiggyVest, another fantastic fintech that has made huge inroads into the industry, starting from nothing, of course. Yeah, she previously co-founded PushCV.com, one of the largest job sites in Africa with the largest database of pre-screened candidates. She was named one of Forbes Africa 30 under 30 technology in 2019 and one of 30 Quartz Africa Innovators 2019. In 2019, she was named SME Entrepreneur of the Year, West Africa by the Asian Bankers Wealth and Society magazine, and she is the youngest Nigerian on Forbes Africa list of 20 wealth creators in Africa 2019. Chuma Ezeri, my brother, is the group executive e-business and retail products in First Bank with several years of experience and has contributed significantly to the growth of the market and the penetration of the market in terms of electronic payments and innovation. His directorate develops and manages all digital and retail products in the commercial bank and other subsidiaries of FBN Holding Company, including microfinance bank, insurance, mortgage bank, and investment banks, and has demonstrated a robust track record of excellence in electronic and retail banking. Wilfred Mama is the head digital transformation at Stanbic IBTC. Is an information technology and business executive with deep expertise in digital transformation, IT strategy formulation and execution, IT managed services, IT service management, business continuity, and disaster planning, as well as agile project delivery. He has led major business and technology transformation programs for many banks in Nigeria and Africa, as well as project delivery experience in the oil and gas and manufacturing industry, and has led the formulation of digital strategy for top financial institutions. Last but not the least in any way is Anita Kimber. Anita is an EY EMEA business transformation leader and is a partner in EMEA Financial Services. She is an open banking champion, passionate about facilitating better business experiences through innovation and creativity, dedicated to building a better working world. Anita leads the transformation practice for EY EMEA Financial Services through offerings such as transformation architecture, business experience, and design and execution. Anita has a track record of success working with CEOs, COOs, and CIOs of major banks and insurance companies globally by helping to execute their business strategies of end-to-end digitization, cost reduction, market differentiation, and growth. She is also proud to have facilitated open banking and innovation for one of the UK's largest financial institutions. Anita works closely with fintechs and innovators across the industry to help deliver better financial outcomes for consumers and small to medium enterprises. Anita previously led the financial services consulting team in EY Asia Pacific, driving business model optimization through digital transformation and fintech collaboration. Let me now call on Dapo Adewale to give us the highlights of the report. Thank you, and hoping you will enjoy a fantastic event today. Thank you.
Okay, thank you very much, Bajomo. That was very well said. So we'll move on very quickly to the insights from the Fintech report. So if the team can please move on to that. All right, so very quickly, in terms of the Fintech report, I'll just give an overview. So our methodology was quite simple. The methodology was as much as possible to obtain feedback as much as possible from the Fintech ecosystem. So the Fintechs themselves, the investors, the incumbents, the regulators, and the guys that provide the enabling platforms for Fintechs to operate, and the enabling infrastructure, such as Leaps, for example. Right, so in all, we surveyed and interviewed over 40 Fintechs. And once again, I'd really like to thank the Fintechs that participated in the survey. So some of the insights as follows, and I think Bajomo, defined Fintech very correctly. EY would typically define Fintechs as organizations that combine innovative business models and technology to enable, enhance, and disrupt financial services. Right now, in terms of the breakdown of fintechs in Nigeria, from the survey that we did, about 250 fintechs plus or minus 10% in Nigeria, with payments and banking as well as lending accounting for approximately 60%. And if you add savings as well, savings and investment and crowdfunding, it will be tending towards 80%. Right, so in this case, payments and banking is really providing payments and account solutions for consumers and financial institutions. And examples would include the likes of Flutterwave, eTransact, Kuda, Paga, Timapt, Interswitch, and the likes. And some of the subcategories would include mobile money, wallets, digital banks, payment processors, and so on. While lending is really those who provide loans to consumers and SMEs online, the likes of Branch, Credit Pal, Swipe. And some of the subcategories in that space would include retail lending, SME lending, credit data analytics, and loan assessment, right? So this is really the breakdown of fintechs in Nigeria. Now, contrary to the opinion that the payments and banking landscape may be, may be saturated, there is quite a bit of a white space because of the financial inclusion drive and the fact that well over 50% of Nigerians are financially excluded. Now, I guess the second point here is growth remains the top priority for fintechs in Nigeria. And in 2020, the fintechs experienced significant growth. So over 70% of fintechs experienced between 20% and 200% growth. We've seen the birth of a few unicorns in Nigeria, 2 unicorns like Mr. Bajomo mentioned, and growth is largely fueled by favorable fiscal policy supporting adoption of mobile payments, growth in infrastructure supporting mobile payments, and then obviously user experience on some of the traditional products, especially amongst the younger generation. So we saw some recent investments in Paystack, about $200 million, InterSwitch about the same. Branch also was able to raise about $170 million. Flutterwave raised about 35 million Series B funding, as well as CUDA and the likes, right? So we have seen significant growth, but the challenge still remains scale, right? And the fintechs obviously are looking for opportunities to partner based on the surveys that were conducted, opportunities to partner, as well as international expansion and growth and access to new customers. So that is where, some of the fintechs, have largely struggled. But despite all of this, there has been a lot of investments and a lot of activity in this space. So for example, on the savings and investments side, we got recent investments, in Cowrywise, about $15 million, in Bamboo, about $150K, and Rise, which was about $140K pre-seed, funding. And we obviously have seen the recent investments in AppZone, Obi's on the call today. And then there's OnePage as well, who raised close to $1 million, and so on. So, like I'd mentioned, growth is still a priority, and what the fintechs continue to focus on is overseas expansion and fundraising over the next 12 months. Fintechs require more investors than financial support, and obviously strategic partnerships remain extremely important. Now, in terms of, if you move on to the next key insight, the next key insight talks about collaboration between incumbents and fintechs. Right now, while it's safe to say that collaboration has improved, there is obviously still a long way to go, because only 50% plus say collaboration is better, while the remaining 50% say it's either remained the same or worse. Now, what exactly are fintechs saying, really? And from the surveys that we conducted, banks are becoming more and more willing to collaborate. Banks do not have traditionally seen fintechs as disruptors, but are beginning to see fintechs from a collaboration perspective, right? And the legacy mindsets, some legacy mindsets still exist, right? That's on the fintech side. Now, on the banking side, the banks are saying that fintechs, seem a lot more agile and customer-centric. And, they need to demonstrate preparation to receive partnerships. So they need to show that they're well-structured, they have the risk management frameworks in place to enable them collaborate. Regulation would also allow fintechs and banks to thrive. And, there's still a massive opportunity. Now, in terms of the regulators are keen on improving partnerships between the incumbents as well as the fintechs. But generally, the major factors that have impeded collaboration, according to the small fraction, about 3% of people is the first thing is, and there are 4 key things. The first thing is, non-progressive or legacy mindsets. I think there's a general feeling amongst this very small number, 3%, that some of the banks just need to move from the legacy mindsets. Then there's also the risk management. Some of the incumbents are a bit unwilling to take risks and do something new, and also around financial commitment. Whether or not the traditional incumbents are willing to commit financially to the partnership. And then finally, the architecture side of things, which is really being able to integrate into technology platforms, right? So in terms of policies, right, that's also another area, where we've seen a lot of traction from the regulators. And for the representative of the central bank on the call, would like to thank you. We've seen a lot of policies, a lot of pronouncements by the Central Bank of Nigeria. So the launch of payment service banks, regulatory sandboxes that allow fintechs to experiment. We've seen new guidelines on open banking, which is fantastic, and also payment licensing have been tiered, right? So there's a regulation on the tiering of payment licenses. Now, despite all of these fantastic initiatives from the regulators, right, the fintechs still see regulation and talent as the 2 biggest concerns, right? With talent coming in, tops. So it's just important, as much as the regulators, have done quite a lot to help foster growth in the fintech space, there's still quite a bit, that needs to be done. So in terms of the way forward, if we can move on to the next slide. In terms of the way forward, I think there are 5 key drivers that will determine the success of fintech. And if you just permit me, I'll spend about 2-3 minutes on this topic. So the first is capital, right? And primary sources of investments today include venture capital, bank loans, grants, and personal funding, from family and friends, right? But fintechs in Nigeria have demonstrated a high reliance on external funding. So a lot of the funding for fintechs has come from outside of Nigeria. But there's 2 observations that can be made that bodes well for the future. First of all, there's significant support from international investors. So fintechs' access to international funding is vast. The second thing is the growth in customer base is promising. There's a high adoption of fintech in Nigeria, and this provides signals to investors on the market attractiveness of Nigeria. Now, the second thing is around demand. So there is a massive demand for fintech services. Obviously, with the pandemic over the last 1 year, that has elevated the demand. So, a lot of consumers are looking for personal finance management, are looking for a faceless onboarding process. Agency banking and mobile money solutions have also taken, a big role. The industry has seen increased focus in fintechs using the agency banking platforms to serve the banks and unbanked population. Now, we talked about payment services banks, which hopefully should help even further improve the demand of fintech services. Now, the third key thing is talent, and talent remains a big challenge. It's not just across the fintech space, it's across sectors. A lot of our talent, leaving the country, right? And the advanced digital skills are critical for the success of the fintech space, and those are the skills that we're losing the most. Right, so 77% of fintech leaders say that analytics, for example, is critical to strategy and operations compared to other digital skills. Now, the talent pool we have today is largely local. Despite the rise in digital skills acquisition, most of the fintech players use in-country talent, well, with some support from international sources as well. Remote working helps. Remote working, helps. It means that we can work with talent across the globe. And so that's really, so to tackle the shortage, it's key that we partner with other SMEs, suppliers, contractors, constantly retrain and upskill our workforce, collaborate with the academia as well to infuse digital. In terms of policy, regulatory support will continue to improve, right? But we suggest that regulators provide a bit more dedication to focus to support. For example, the CBN may consider how regulatory support can be extended beyond just the sandbox. Right now, while the sandbox is fantastic, right, it's important that we extend beyond the sandbox. And then finally, collaboration. We see that collaboration has improved, but it needs to continue to improve. There's a term which I refer to as co-opetition. So rather than compete, you work together within the ecosystem to complement each other. And we're seeing some of those new business models. We're also going to see a few banks spin off fintech entities, while others opting to digitize their operations. But we anticipate increased collaboration. So that's it from this segment of the report in terms of the insights on the Fintech Census Report. The report is summary report is about 35 pages. We will, during the course of the webinar, we will share, the links and who to contact to get the full details of the report. So at this point, I would like to thank everyone once again for listening in. And at this point, I will hand over to Bunmi Kuku, who would run the panel session. So thank you very much. Over to you, Bunmi Kuku.
Thank you very much, Dakwa. That was quite insightful in terms of the census, some of the data that EY and Fintech NGR have been able to gather on the fintech space. I'm excited about the lineup of folks that we have on the webinar today. A couple of you I have worked with, so welcome, nice to see you all again. And I think we're really just in exciting times, right, around some of the investments that we're seeing in the space, the partnerships that you all have been able to make with the entire ecosystem. We have a lineup of questions, but before I do that, I know that we've done a quick introduction of the panelists, and I'm just going to do just a quick summary of the folks that we have on the call. So I know Odun, you're now on. Welcome, Odun, who's the CEO of PiggyVest. Obi Emeteram, CEO of AppZone. Welcome again to the session. We have Chuma Ezrim, who's the Group Executive Director of First Bank. Anita, as well as Amia and Jimo and Wilfred. So thank you very much, everyone. I think it's really exciting. For the folks that are on the call, we would like you to please post your questions by typing on the right-hand side, and we will take on those questions and, of course, pass them on to our panelists. So just given where we are, I think we will start off our very first question to you, Anita, just given your experience in the space and actually working across EMEA. It's actually interesting because we've had a very different 18 months is what I would say, which we couldn't predict. And given all of the events and the impact of COVID, I think what's really important for people to understand are what sort of trends have you seen in the space today or in the fintech sector today? And when I say trends, I'm specifically looking for those that came about unexpectedly. So what happened in the last 18 to 24 months that you wouldn't have projected about 4 to 5 years from now? So over to you, Anita.
Thank you. And can I just check that you can see and hear me?
Absolutely, Anita. We can see you and we can hear you.
Thank you, and thank you for the opportunity to join. So just to give you a bit of context on what's happening across Europe and to answer your question about unexpected trends, we completed last year as EY a review of fintech globally, which demonstrated that the market is, well, the market last year was worth about 110 billion globally and is predicted to grow to about 380 billion globally. So what we're talking about today is worth getting involved with, and that's just purely fintech. That doesn't even take into account the amount that banks, insurers, wealth and asset managers are investing in innovation and technology. So it's a huge market. And then within the UK, I've been really privileged to be part of a review that's been led by Ron Khalifa, who was the ex-CEO of WorldPay, who was asked by our Chancellor of the Exchequer to look at what's happening with fintech. So I come at this from being really immersed in it for the last 12 months. And I think what may have surprised some people is just how resilient and successful fintech has been. So what we've seen during the pandemic across all jurisdictions is the innovation and that digital focus on what's best for consumers, what's best for SMEs, so small and medium businesses, and we're seeing a huge focus on that across jurisdictions. That focus, that customer centricity, has really enabled fintechs to respond quickly. They have been in the right place at the right time to help get funds out to consumers and businesses. They are increasingly helping consumers and businesses manage their money. So I think the surprising thing for some has been how resilient fintech has been, and therefore what an increased opportunity it provides for everybody, I think, who is interested enough to be on this call.
Thank you very much, Anita. Are you done?
Yeah.
Okay, great. So thank you very much. I think in terms of trends, that's actually quite insightful. I'm going to go over to Obi. Obi, exciting times for you, and congratulations on the last raise. I think for you, one of the questions that I'm sure a lot of folks would love to hear is really to understand how your journey has been as a fintech, as we try to encourage others in the sector to raise funding. How has your journey been? I know we've had some interesting times and some battles as you started off looking for a Series A as well. But I think it'll be good for folks to hear about your journey, what has worked well, what did you have to do differently, and what sort of tips do you have?
Okay, yeah, thank you very much, Bunmi, and it's nice catching up again after doing quite a lot of stuff together in the past. Our journey as a fintech. So first of all, I would say we fall into the category of the way we categorize it, fintech infrastructure. So we're an enabler, so we're not in lending, we're not directly in payments, and definitely not in savings or investments. So we are more an enabler. What that has done, or the impact that has had on our funding journey, has been we realized that when you compare the local investors to the international investors, even though there's a lot more investment opportunity internationally, we realized that for the fintech infrastructure category, where you're building out digital infrastructure for banking or for payment for the banks, the local investors tend to understand the dynamics of that environment locally a lot more than the international investors, at least in the last few years. And maybe that's changing now. But what we realized is that the business models associated with say digital lending or payments tended to be more easily understood. The other difference as well, we are an ecosystem in the sense that we play across a stack. So we provide banking infrastructure that manages the entire banking operations and banking and accounts in a fully digital way, as well as payment infrastructure that sort of integrates these institutions together. So it's an ecosystem play where you have a group of complementary products within a stack, as opposed to single product plays. We also realized that early on in the fintech investment journey, a lot of the international investors typically understood the simpler single product type of B2C facing business models much better than the ecosystem play at the infrastructure level. And would see that, and then even for the international investors who sort of understood it, there's the concern about the challenges to pull it off. So some international investors understood it and believed it's potentially quite powerful and understood the value proposition around localization of functionality and cost, but saw challenges in terms of pulling off the model. Now, locally that influenced our decision to go with a co-investor for our Series A as a local investor who understands the opportunity, and we can prove the model more clearly and become more visible in a way that in subsequent rounds the international guys can participate and be a lot more comfortable, to back us. So that's been in a nutshell, the dynamics around how funding our journey and so on.
So Obi, I'm smiling, right? Because I know when we worked together in the past, like some of those conversations were around, the international investors that you had, having them understanding, the growth trajectory, the dynamics of the market, and how your business grew. And I'm excited to know that we have Chuma on the call, because a lot of the banks are users of your service. And I'm just curious for you, Chuma, what you see as a growth mindset, or what is required from the fintechs in two fronts. One is, how could you potentially help them grow or boost their businesses a lot more by providing them or coming in at some point really around that very early stage investment that they're looking for. But it's also a give and take, right? So while they're trying to while they're setting up their systems, while they're working on increasing their number of transactions, which are the things that a typical investor is looking for you guys. And you and I also just had a conversation very similar to this, Chuma, last week, is while the banks cannot necessarily accelerate development at the same rate as the fintechs, what can they in turn do differently so that there's somewhat of a partnership of minds as you start to grow out the ecosystem? Chuma?
Okay, thank you very much, Bunmi, and good morning, everyone. So, very interesting question, and I would want to look at it, from maybe one or two angles. One is that it is important that a fintech defines clearly what it wants, its strategic, objective. Okay, I like the way Obi, puts theirs. Okay, they are a fintech infrastructure provider or enabler. Okay, so for a bank, it is very clearly understood. So it is very easy to engage and absorb. Okay, so so the good thing is that in 2010, we worked closely with Obi, to deploy what today is an industry platform. Okay, they used us as guinea pig, and we took a risk, and that worked. So it was very clear. So for a bank, there are several ways you can engage a fintech. I'm one of those that believe that it is not fair to see fintechs as a threat to our business, because the opportunities are enormous, and there are areas for collaboration. Okay, so and that's what we have done largely with all the fintechs that we work with. What banks will have to do is to be very open when engaging fintechs. Okay, so we've had one or two cases where a fintech approaches a bank, and then the bank goes ahead to copy that solution and then deploy. Two, it's also be very fair in the commercial discussions. Okay, knowing fully well that that fintech is responsible to grow. Okay, so which is also one of the things most banks in Nigeria have done in terms of making it a win-win value proposition or relationship based on what we are doing with them. Okay, so for me, if a fintech is a financial service or financial solution provider, it is a bit more straightforward to deal with. But for a fintech, that is a service provider, that's in the sense that it is also offering the same services that an incumbent or a bank does. Then also, the way you relate with such a fintech might be a bit different. I'm not saying that there's no room for engagement or working together, but definitely it's going to be a very different kind of relationship. Okay, but largely, what I would say, is that the fintechs, when they approach banks, okay, there are a bit of concerns, that we have raised. One is that some of them do not understand the regulatory landscape. So, and that is where the banks would have to play a major role, just trying to guide them to understand that payment is a highly regulated, business or service. Two is also areas around security of what they are providing, especially in terms of information security. It's also something that banks and fintechs can work together. And then the third one, which I think is very important, is the viability of whatever they are bringing to the bank, or to the market. Based on our experience as incumbents, I think we also have a very major role to play in guiding the fintechs. But largely, when I look at the market, I think that the opportunities are enormous, and there is room for collaboration, between the incumbents and the fintechs, just to explore, the massive growth opportunities in the market. Thank you.
Thank you so much, Chima. This is helpful. So you've almost started alluding to conversations that I would like to have, but before I speak with Mr. Musa, I'd like to ask Odun to at least share her experiences. So the regulators are really supposed to help provide some sort of guidance or a level playing platform in terms of how we all operate in the market. And we've seen a bit of pronouncements to that effect. But at the same time, we have heard some pronouncements that have either stalled or reduced the type of acceleration that we would have liked to see in the space. And Odun, the question for you is, in your business, how has some of the pronouncements from the regulator affected your business, and what can be done differently? I'm hearing a bit of background noise. I'm not sure where it's coming from. I'm going to ask anyone that is not speaking to please mute their devices or their phones. Odun, the question for you again is, how has this impacted your business? Odun, can you hear us? Odun?
Can you hear me?
Yes, now we can. Please go ahead.
Okay. No, so you have to repeat the question. I've cut off a couple seconds.
Not a problem. So Chima was talking about the fact that some of the fintechs actually do not have a good understanding of the regulatory landscape. And it's good because we have a regulator here, and there's been quite a bit of noise around how the regulator has played in the space, how they can continue to support the fintechs to boost their business. And the question for you specifically is, how have some of the pronouncements from the regulator impacted your business, either positively or negatively? And if there are things that you would like to see done a bit differently that will help you accelerate growth, what are some of those things?
I mean, I would say, regarding the regulation from probably the CBN, the one that was most challenging was the cryptocurrency one, because that's rising very quickly in adoption, and it was a line that we were looking at towing, but now we can't. and it does kind of feel like we are shut out from trading or exploring that profitably or not profitably, just to stay in line with regulation. So it does affect. Cumulatively, I would say so far it's been slightly of a net negative for like the ecosystem at large. I think that what we would have loved to see would be more of a conversation with things like what exactly can we as fintech startups do to be like in line with regulation, and for new technology, how can we make it fit, right? So I definitely understand that there's a lot of fintech companies aren't familiar with regulation and how it works. That there's that, but I don't think it's for like I don't think it's due to an unwillingness to. I think it's one, regulation is a bit complex. A lot of fintech companies are trying to do simple things. A lot of the existing regulation are for bundled up services. One of the key things that fintech is doing is unbundling and it's like picking aspects of the financial services ecosystem and offering it. So for fintech companies, it is hard to say you're following the regulation because you could be lending as a business, but not banking, right? Or you could be creating a wallet system, but not particularly interested in the intricacies of like the banking system as a whole. So it's a bit different, I'll say. And I think that there is an avenue to kind of sit with the regulators as well and have like a conversation with them, right? Like, what are we doing right now? Where is the tech going? And how can we make sure that there is a meeting point between tech and regulation in a way where both parties leave reasonably happy away from the table?
Thank you very much, Arjun. That is helpful. So, Mr. Akinwumi, I hope you're now on. He's actually representing Mr. Musa from the CBN, and we've heard from the fintech. So I heard Chuma say some of the fintechs need to better understand the regulatory landscape. I'm hearing Arjun say, look, it's not that we don't understand it or we don't want to understand it, but rather some of the regulations are quite complex. Some of them have impacted our business. So I think the question to you, Mr. Akinwumi, is what are the measures that the CBN is currently putting in place to somewhat try and educate some of the fintechs, or at least close the gap so that we have a good working system for all of the players in the industry? Mr. Akinwumi, I hope you can hear us.
Sorry, apologies. Okay, I think his line dropped off, but he's trying to rejoin. So if you can just ask the next question.
Sure, I'm happy to do that. Wilfred, welcome on board. We do have some questions for you as well. You guys have also been at the forefront of digital transformation, and you're kind of sitting at the sweet spot of that. Question for you specifically would be, how best can you continue to work with those in the space, so players in the space, or what can be done to at least try and close the gaps in terms of the collaboration that exists today in the digital landscape and with the fintechs? Wilfred?
Yes, Bunmi, thank you for the question. First, I would like to say thank you for the opportunity to be here. It's an honor, and I want to thank the team. The study is a very insightful one, so well done to the team for such an excellent work. Now, to the question, I think, yes, the future, I believe, is about platforms, right? We've seen what the platforms globally are doing, and the platform business model, I have no doubt, is what will drive growth in the future. So it's about partnerships. Partnerships will continue to grow between incumbents and the startups and the fintech players. So how do I see this continue to evolve, and how we get better? I think the first thing is we must realize that, like Chuma already said, we need to collaborate. We don't think it's about competition. Yes, competition is important because with some competition, there will be that innovation to drive value for the customer ultimately. But more importantly is the collaboration that we need. Banks, we know, are trusted, probably the most trusted institutions in the world, arguably, but fintechs need to tap into that to provide innovative solutions as well, where the banks are not addressing the specific needs of the customers, right? One thing I think the fintechs must do is to be transparent. Okay, you don't want, banks are highly regulated, and it's we know why the regulators place a lot of emphasis on ensuring they monitor what the banks do, because of the potential systemic impact of any negative outcomes from those huge or big institutions. So they are highly regulated. It then means that if you're a fintech and you're partnering with a financial institution, you need to be very transparent in terms of what you're offering. It will not be good to have integrations with a provider and then you discover they're doing something else other than what you had envisaged. Okay. That being said, it's already been mentioned that we need to understand the nuances of operating in a very regulated market. So you hear this thing about banks are slow, right? The fintechs will say the banks are slow, they're not moving fast, they're not agile, and all of that. But the reality is that the banks are also taking very measured steps. Okay, the area of risk management has been emphasized. We want to check that the institutions they are dealing with have the necessary processes to at least handle the kind of data that they'll be interacting with from the bank perspective. So having a good governance in place helps, no matter how lean that is very important. And then learning from the banks. So when banks try to ask those questions, they are not trying to delay the process. They are trying to just help you, cross the T's and dot the I's before you go far into those partnerships. So I think if the fintechs view banks the way they view customers, trying to solve the problem, we can jointly collaborate to address some of the challenges. Thank you.
Thank you very much, Wilfred. Please just hold that thought for a minute, right? Because I'm seeing questions in the chat really around how you are potentially planning on transitioning your legacy assets into digital. So think about that for a minute. I'll come right back to you. I understand Mr. Akinwumi from the CBN is on. Mr. Akinwumi, can you hear us?
Yeah, good morning. Yes, I can.
Good morning. Good morning and welcome. So you've missed a lot of the really interesting stuff. I hope you caught it before you dropped off. But there are a lot of questions for you. The timeline is being flooded and the chat room with questions for the regulator. We'll try to take it easy on you, and we hope that there are questions that you can help us with on the call. One is largely around the licenses, and there are questions around what the regulator is doing to accelerate granting licenses. So the PSB licenses, for example, to MTN and Airtel, and how that's outstanding. And then the second question, if you can please answer them together, are what are you doing to try and close the gaps between understanding of the complex regulatory framework that exists for the fintechs in Nigeria today and pretty much bringing everyone up to speed? So 2 questions in one. Hope that's not too much.
All right, thank you very much. I think I can quickly address that. On the PSB, the framework is very clear. We've had various, have at least 3 licenses issued. When you talk about some particular telcos, we don't think around names. We simply accept applications and we go through our normal processes, and so long as the applicant can meet the requirements, they get the license as may be determined by the management of the bank. So we expect that once the applicants have met the requirements that has been issued by the bank to them, they will also be treated along the line of the 3 that have been issued licenses. With respect to closing gaps and then managing how fintechs explore around the complex regulatory framework, I think we've been trying to do more work around clarity in terms of our regulation, and we're also trying as much as possible to also to issue more regulations around areas that we have not for some time addressed. For example, you are aware of the open banking framework. We know that a lot is going on around APIs and its usage within the industry, and we're trying to give some direction as to how we expect those in that, the participants or the operators to play with regards to that. Beyond that, the bank, if you look at the last 10 years, we've been very clear as to the vision. The Payment System Vision 2020, which we hope will soon transit to a Payment System Vision 2025, have actually galvanized the operations and the interest in fintechs within the financial services space in Nigeria. First, with our effort towards transforming the retail payment landscape. That has actually, with the cashless policy, stimulated interest in the payment system. And with the stability we gain in the payment system and progress made over the first half of the 2010, we saw lending coming on top of that. Today we see payday loans and the rest coming on top of the fact that government payments, supplier payments, which are things envisioned in the Payment System Vision 2020, have come to stay. Now going forward, 2025 Payment System Vision 2025 will also give clarity to new or to emerging trends within the fintech landscape and within the banking and payment system landscape to ensure that you can dimension your business along those lines. What the vision document does is that it gives clarity. It also expands it opens up the market. If you look at where we started from in 2010, when we started with a mobile money operator, gradually along the line, we have payment terminal service providers coming into play. We then, along the line again, have super agents. We have PSB coming in 2008 and finally being licensed. We gradually take those steps to ensure that we understand what is evolving and we are able to manage the risk in order to ensure financial system stability. And the integrity of the financial system is very key. So we need to carefully manage the rate at which we open up. Notwithstanding, we continue to engage participants, stakeholders within the banking and payment space, as well as the fintech space. Sequel to our issuance of the new license categorization, we have meetings with all the operators where we clarified the issues they have with respect to that regulation. They also have a clarity as to how to progress. We've been engaging with them as to how to, comply with some of the requirements in that regulation. So we'll continue to engage. We continue to hold forums where we can exchange ideas and see ways of improving the space. Thank you.
Thank you very much, Mr. Akinwumi. That was quite helpful. Although you heard from the regulators themselves in terms of how they are trying to close the gaps, and for our audience as well, who have asked some of the questions around the PSB license, as well as some of the regulatory activities that are happening in the sector. I hope that was helpful. Anita, I'm going to go back to you very quickly. So this question is actually for you and also for the regulator. EMEA has been quite active in the open banking space. Nigeria has also just recently said, that we're going to have a sandbox as well that is being set up, right? But I guess the question for you is, what types of successes have you recorded in EMEA around open banking?
So I think open banking has been phenomenally successful. People expected open banking in the UK to change things overnight. It was implemented in 2018 in January, and by February, because everybody wasn't using it, it was defined as a massive failure, and far from it. I actually wrote a post on LinkedIn only yesterday about an incredible tie-up between our national census pollster and open banking, but where people are using open banking data to really understand what consumers are looking for in the UK. So the use cases are phenomenal. We're seeing use cases now around mortgage applications and really facilitating mortgage applications, as well as what we all expected around payments and around personal financial management. I think in the crisis, what was in the pandemic, what was also interesting is how quickly open banking got taken up by fintechs and by challengers to facilitate lending. So actually accessing, particularly for SMEs, their very, very complex transaction data and being able to use that, and open banking really facilitates that. We saw a massive uptake of SMEs with some of the challengers and fintechs that I don't think we would have seen as quickly, because I've heard on this meeting about the banks having trust, and absolutely they do, but the banks also need to have innovation and speed, and that's where the partnering with fintechs comes in. So I think open banking in the UK is really starting to come into its own. I think what's interesting is how other jurisdictions are also leveraging open banking. When we did the fintech review, we spent a lot of time talking to the likes of Singapore, to India, and to Australia. And open banking is going beyond banking now, and people have talked about ecosystems on this call. It's going beyond banking and really leveraging APIs to be able to help consumers and SMEs access the breadth of their interactions safely. So massively taking off globally. But I would emphasize, and listening to the central bank, listening to a regulator's perspective, listening to a fintech perspective here, I think the thing that comes out is it's worth doing safely. It is worth taking the time to make sure that the frameworks are in place, that consumer and small business trust isn't lost, because it's all well and good when open banking works well, but when there are issues, people really need to understand who do they go to when there's a problem, how do things get rectified. And I think that by taking open banking thoughtfully, that we all benefit, the whole ecosystem benefits over the long term.
Thanks so much, Anita. I think we're all for having mutual benefit across the ecosystem. There's a comment in the chat room, but I actually want to direct this at Mr. Bajomo. I'm going to take it as a comment rather than a question. So there's the fact that while there's some gaps between how the fintechs operate as well as the position of the regulator, I think it's more of a plea to the Fintech Association to help bridge that gap between the regulator and the fintech. So that's a task for you, Mr. Bajomo. I'm hoping that you're willing to take that on as an association, and I know that you're quite palatable to supporting with that. Now, I'm going to quickly go to you, Chuma, and I would like Wilfred to also support with this question. So we've heard the terminology platform banking come across heavily. We know that you're also doing a lot of work, right, with some of the fintechs and the ecosystem. And there's so much to do around, agency banking as well as the financial inclusion drive that the CBN is working on. I think for you, what we'd like to understand is what are your biggest priorities at the moment with your e-business, and potentially to leverage the ecosystem of fintechs to help you accelerate that growth.
Thank you, Bunmi. So for us in First Bank, we see, banking or payment a bit differently from what's common in the market. For us, it is largely a platform game. So when people approach a bank, you are just looking at the customers, or you are just looking at maybe our core banking application, or maybe our branch network. But what we are doing, recently is just to get, especially the fintechs, to look at us as, platform providers. So if you take a typical bank, your mobile app is a platform. Your agency banking network is a platform. Your USSD channel is a platform. Your POS, your ATM, I can go on and on. So typically you have maybe about 10 to 15 platforms, but conservatively between 5 and 10. So in engaging banks, okay, the question is for each of these platforms, the engagement is different. So when you approach me, when I'm discussing with you on collaborative opportunities around agency banking, it will be quite different from when we are discussing maybe First Bank as an enterprise. Okay, so for us, that's how we view our engagement with all the stakeholders, and it has really worked. Okay, so we see it more of as a platform play. Secondly, too, and that's why the open banking regulation is coming at the right time. Okay, it's also has to do with giving these fintechs, or other stakeholders access to some of these platforms, because we understand clearly, that scaling customer acquisition and even monetizing, semi, can be quite hard. Okay, and that is why it's quite difficult, even from what Anita said. I visited Europe, in last 5 years, when the PSD 2, this was in vogue, and there was so much excitement. But after 2 years, we could see that, it's not really as successful as people, that, not that it's a failure, but it's going to take time, for these fintechs to really, grow the base that they require to really, become, very profitable. So that's where they need banks. And the truth is that, you just need to provide them, okay, that access, but in a very secure way. And that's why the API, some of the things, banks are doing around, developing APIs just to enable people, connect to some of these platforms. So just to summarize, I think for us, it is more of a platform game, and that when we start seeing the market, from platform point of view, then the opportunity will be quite enormous, both as a bank in engaging the fintechs, for solutions, or the fintechs in providing solutions to the banks, or partnering with the banks to leverage on the large, customer base or assets they've built over time, to scale some of their solutions. Thank you.
Thank you very much, Chuma. I'd like to move to Odun. So Odun, while we have regulators on the call, we have fintechs on the call, and we also have some of the banks, but we do have individuals on the call. And as we've noticed over the last 12 to 24 months, there's been changes in consumer preferences. So they're looking for alternatives, various types of investment products and savings products. And for those of them that are on the call, or those of us, because I'm also one of them, I guess the question is, what can we look out for as a new game changer in that savings and investment space? What should we look out for? How does Piggy, or potentially some of the other savings and investment type fintechs are putting out, and what could help us as we make decisions as to, do we go to the traditional banks, do we leave our money there, or how can businesses like Piggy help us accelerate our investments?
You have 1 minute remaining of your credit limit.
Sorry, Odun, I know you're on your phone. I don't know if you're about to drop off. or if you can speak very
Can you hear
quickly.
me?
Yes, we can.
Can you hear me? Yeah, so I said that, like, I think that, yeah, I'd always, as a fintech founder and a fintech advocate, I would advocate more people like run their personal finances via fintech companies. If you look around, there is a fintech company for anything, like for everything. There's savings and micro investments like Invest. There's mutual funds and savings and investment like Carrywise. There's real estate backed savings and investment like PettySave. And there's now a new company that's coming to presumably create a link among all fintechs that is wallet interoperability, right? So there is quite a lot going on in the space. I think that there's this year,
your call credit has been exhausted and your call.
So apologies, everyone. Odu actually joined us from her phone because she was having connection issues on her laptop. So we'll wait for her to come back on, and we'll move very quickly to Obi. So Obi, I think the banks have expressed what it is that they're looking for as they start to work with partners across the ecosystem. I think Chima was very clear in terms of how they prefer to work with fintechs, what it is that they're doing. I think it'll also be good to hear from you around, some of those investments that you are making in technology to help boost the partnership across the ecosystem as well.
Okay, great. So basically, what the ultimate aim for banks, for fintechs, digital financial institutions, is to crash costs significantly, expand scope to enable growth, and improve competitiveness through the right type of user experience. And that's what our focus, all we're investing in is to enable these three drivers. So a lot of automation, areas around card processes, trying to eliminate as much unnecessary human involvement as possible around reconciliation for interbank transactions, disputes management, lending, loan application processing, the typical stuff that are heavy on human effort. So a lot of automation to crash cost significantly. And then in terms of expanding scope as well, ways to leverage digital channels to reach out to segments, unlock segments that have typically been difficult to tackle. Yeah, so we have quite a roadmap. Some products were already in pilot with some of the banks, some huge R&D efforts going on. Yeah, so basically.
Thank you very much, Obi. This is helpful. So Wilfred, I had mentioned earlier, because I wanted you to start thinking through how you respond to that. I find this question actually very interesting because I've worked with a couple of tier 1 and tier 2 banks recently, and I think everyone is excited about the valuation that the fintechs get, and they're like, oh, you know what, they're getting a 10x, 15x valuation, and why can't we do that as a bank? And I've seen some that actually say, you know what, we're operating in a digital environment, we want to be like a fintech. But in reality, I know that they do have some existing legacy costs, some from a regulatory perspective, their branch network, capital requirements that are quite different from how the fintech operates. And I think the question to you is, as we start to move towards a more digital environment, what is the plan for some of the legacy assets that you have today? So things around your infrastructure, your people, to make you be able to operate in an effective market. Wilfred, questions for you.
Thank you. And I think that's a very brilliant question. Reality is that, yes, the traditional or the incumbents carry a lot of legacy, and we know that. Okay, so the operations cannot overnight become similar to a fintech that just started in the era of cloud technology, right? Now, what I have seen banks do is to try and modernize that legacy system that we talk about. So we, for instance, and I know a number of other banks have gone through a core banking replatforming exercise, okay, where that real core of the banking processes is transformed to at least enable you to do a lot more services via APIs, right? I have also seen banks, and we have invest in robust API management platforms. So you no longer develop APIs on an ad hoc basis. So somebody comes and asks for an API, and then you go and develop and share, right? But you have a comprehensive list of APIs that are loaded on your API management platform that you can then share with partners and potential partners. So that, again, in the conversation of open banking, when things are firmed up, it's easier for people to even leverage those APIs and just test some of their innovative ideas. So I see banks in that technology area dealing with infrastructure in the best way that we have to deal with it, while keeping the legacy infrastructure the way we can. Okay. Now, again, those infrastructure are very important. No matter what we do, we will not move the entire population to the digital platform, no matter how hard we try. So you will still see people walk into the branches to do their transactions. You will still see people go to physical locations. So I'm sure the regulator will also not want the banks to shut down all branches because we're going into digital transformation. So a balance is important, and is to begin to then make those branches a lot more digital focused, you know, with less investment in infrastructure, but modernize it to offer more at the locations, right? So that is it. From a personnel perspective, again, we are seeing a lot of transformation. I can speak for my organization, where we've invested in solutions like internal workflow systems, which automatically frees up a lot of people. Invested in CRM systems, which again digitize a number of processes and frees people. So what we do is proactively train people. We have a very robust from the Standard Bank Group training platform that we get our people on board to get them skilled to just do things differently. Okay. We also then infuse digital skills in the system, so that way we can bring existing personnel and digital natives, you know, to work together and just get everybody to adopt what we are doing and be able to align with the trends. So those are some of the things we are doing in terms of technology, in terms of people, and in terms of knowledge acquisition. Thank you.
Thank you very much, Wilfred. That was quite insightful. Mr. Akinwumi, we're just going to ask if you have any closing remarks, anything that the CBN or the regulator is doing to motivate our friends on the call today.
All right, thank you very much, Bunmi. I think the first thing is to say that if we all agree on the fact that we need to keep the financial system stable and we need to keep its integrity, then we can then all have at least start from the same standpoint, because before you can grow your market, if people don't trust the system, then you may be out soon. So the first thing is, let's work together to ensure that the consumers that we want to use our services are assured that when they onboard, they get the best service they can afford, and they are assured of the safety of their funds. And in so doing, in collaborating, let's be sure that we put risk management in focus, as it's not just to slow down business, but to also encourage business. So long as we are able to sustain the integrity of the financial system, we are assured of the confidence of Nigerians to continue to patronize us. Lastly, we are always open to collaboration. We are always open to discussion around how we can make the environment, the regulatory environment better. We continue to engage on various forums, and we gladly welcome suggestions and feedback from the public. Thank you very much.
Thank you very much, Mr. Akinwumi. I would like to close out the panel session for today. And by doing that, I would like to thank all of the panelists that we had on board. This was quite insightful. We like the fact that we were also able to engage the regulator, have an understanding of, where the banks are, where the fintechs are, and what's generally happening in the industry. Thank you again, and I'd like to hand over to my colleague, Dakbo Adewale, who's going to talk to us about how the report will be shared before we hand over to Mr. Aino, who's going to close out the session with a vote of thanks. Thank you very much. Dakbo, over to you.
Yeah, thank you very much, Bunmi, for a very well moderated panelist session. Also, thanks to all the panelists who've attended this session. I think it's been really, really insightful, and I personally have learned a lot, and I can imagine that the audience would have learned immensely from this. So, in terms of the report itself, right, the report would be made available from next week. It will be downloadable from the Fintech NGR website or from the EY Nigeria website, right? So an executive summary of the report. Now, for those who want a bit more details, either because you want to make investment decisions or you just want to restructure your fintech business based on deep insights and knowledge, there is a more detailed paid version, which you can also obtain, which provides significantly more granular details than what you would have in the exec summary. So that you can get by reaching out to either the head of the senior partner and head of markets at EY, or the president of the Fintech Association, as well as the chief operating officer, Dr. Obrima, of the Fintech Association of Nigeria. Right. For those who also want to get insights on some of the studies that we've done in the UK, in Asia Pacific, Singapore, India, Australia, and the likes, you can also reach out to Anita Kimba. I think it's safe to assume that there is a free version that can be shared. And for more insights or details, there's also a paid version as well. But look, you get everything that you need to get from the executive summary version. So I'd like to thank everyone, but let me just hand over to Dr. Shego Aino, and the reason this is really special is because Dr. Shego Aino is the brain behind the Fintech Census Report, and would like to thank him for making this happen and for giving us all the support during the early stages of the conceptualization of this. So thank you very much to everyone, but I'll hand over to Dr. Shego Aino at this point to give a vote of thanks.
Thank you very much, Dakbo, for the opportunity. And I want to say that I've enjoyed all the discussion that we've had today, the launch, summary given by Dakbo, and then the webinar that was just listened to by some of our best in the financial services and fintech sector. And yes, this Fintech Census Report, something that we worked at the Fintech Association of Nigeria, and we have been working on for some time, and we are happy that it's been launched today. And this is going to gradually change the narrative in terms of information and support for the industry and for investors. And for this, I want to thank the chief EY, led by the Regional Managing Partner, Ajit Patil, and of course, Dakbo Adewale, the partner who has been behind this since we started this project about a year ago. Of course, I also want to remember at this point, Mr. Henry Ebiki, who was the immediate past regional managing partner, who was fired under the started this project. So thank you very much to the EY team, and I will thank everybody, the president of the Fintech of Nigeria, and the government council members, and the management for what they have done. And the importance of this report cannot be overemphasized because of the implications and the impact it will have on the ecosystem in Nigeria. And as I have said, the goals and contributions of fintech to national economic development in the area of financial inclusion, payment system, digital adoption, and so on and so forth. And I was very pleased with the 5 key drivers that were brought out in this presentation. capital demand, but more importantly for me, talent, policy, and collaboration. I will be able to get this right so that we can continue to see more of the growth that we are seeing in that sector for the benefit of our economy. In concluding, I want to hope that this report will not be static report, but will be reports that will be updated on real-time basis so that because the environment is so dynamic, the fintech ecosystem, technology is so dynamic that changes every day or even every minute, every hour. So I hope this report will be something that will find a way of reaching that regularly. So I want to thank everyone for joining and look forward to having you on future activities and events of the Fintech Association of Nigeria. Thank you very much.